Good evening everyone, my name is Anirudh Prakhya and I would be talking about the Boeing company as part of the Credit Suisse HOLT valuation challenge. First, to take a look at the aerospace and defense sector performance between 2006 and 2013. Defense has outperformed even S&P 500 in 2013. The commercial traffic is expected to grow at 5.3% in 2013 and 6% in 2014. The Boeing commercial airline deliveries are expected to peak in 2018 and then plateau through till 2020. Boeing and Airbus together would deliver about 1400 aircraft in 2014. To give a brief description of Boeing, it's a Chicago-based company and was founded in 1916 and primarily operates in 5 segments. From the HOLT methodology, we see that market is overvaluing the firm at $138 when the warranted price is only $125, so there's a 10% overvaluation. The risk is average credit rating is A, which means the probability of default is 0, and the estimated CFROI levels for future would be 9.6 to 9.7%, and asset growth would be somewhere at about 3 to 4%. Overall, the firm has been performing better when compared to the S&P 500 index. In terms of the sales and margins, the sales growth is stable at about 18-20%, and operating margins are around 15-16% over the past decade. Moving on, a comparison of Boeing with aerospace and defense shows that the firm is mimicking the sector as a whole in terms of the economic PE, while the price to book value of Boeing is lower. And if we assume a high growth rate, then the warranted price would jump to $150, and as per a more later and more recent report from Credit Suisse, this should be corrected to $162. For the sake of this presentation, we'd stick to a warranted price of $125 itself. Compared to peers, the earnings, the price momentum has been pretty good for Boeing, and even the earnings per share has been pretty increasing over quarter on quarter. And overall, the warranted equity value for Boeing is about $94 billion, which again translates to $125 per share in terms of the warranted price, and thus market is overvaluing it by 10%. However, I would stick to the idea that since its performance has been better, it is outperforming the market, but market is overvaluing. Thank you.